At some point, I knew somebody, and she worked as a manager, a branch manager at a major bank. She told me that one of the conditions for her position was that she had to sign an agreement, agreeing not to engage in any sort of political activity and also to keep certain information confidential. Okay. But I never signed any agreement to keep confidential the fact that that same bank had engaged me in a banking relationship years before. And over time, it was determined and understood that things that had happened with the initial relationship were not as they were presented at the time. That insofar as I was engaged or allowed to be issued, for instance, a credit card for a certain amount of money, it was never disclosed that their determinations were in conjunction with other financing paradigms that had assessed me as an asset for somebody else's availability. Over time, it has been proven they specifically and deliberately engaged me in the relationship they did at the time they did, with an understanding somebody else intended to use me and my assets for their advantage, and depending upon my consumer choices, as well as other choices I made about my sources of income, as well as the relationships I made around the rest of the financial sector, they may or may not determine to subordinate their interest in having a good faith relationship with me to whatever it is they anticipated they were going to get in return for prioritizing other financial relationships that had not been previously disclosed. I believe things like this were behind what was determined to be a requirement insofar as people or entities had agreed to be a member of the Basel Conventions that was supposed to be implemented for July of last year. There were certain terms internationally that banking and financial institutions were supposed to adhere to relating greater disclosure on sources of income. Now, the Basel Conventions, this particular element was supposed to go into effect in July 1st of last year. Not so ironically, shortly before that, a little over a year before that, I found a proxy statement for a bank that might have been identified as a rival, but had cooperated with the financial institution I first mentioned on several very, very significant deals, as well as, if nothing else, being a recipient of money from the Troubled Asset Relief Program that the United States government put together and that Congress passed and then gave to Treasury to administer following the 2008 financial crisis. There was a proxy statement, and I had understood that part of the relationship between the one financial institution was to use accounts from the other one as a sort of proxy for operations that they had going on. I followed this with a number of banks and was able to identify from a particular theory that I had that if that in fact was a practice that was allowed to occur, this concept of counterparty swapping or debt default swapping that was able to be benchmarked or identified for benchmark posting based on quarterly earnings statements as well as timeframes around the proxy statements that were released, that it made sense that you could start off with an account at one financial institution. Whatever ended up happening, you accumulated what they said was a debt. And then they sold it to another bank. So you're working all kinds of lines of finance for that bank. And I believe it was intentionally engaged as such. So you could not track who was using you and manipulating your life for their financial gain without disclosure. Now, when the timeline came for the Basel Convention implementation last year, only one thing seemed to acknowledge it. There was a public announcement that Warren Buffett had donated up to, I believe, $72 million to charity. It was either 72 million or 720 million. The point of the matter is that it was some derivation of 72, some amount of 72 being donated to charity. The actual charity or charities of concern was not revealed. The actual specific investment funds or entities of concern were not revealed either. But it was allowed to be put into the public realm as some sort of public notice. It did not, however, fulfill the terms of what I understood was anticipated, expected, and required to be implemented by July 1st of last year. It was, however, a sort of beta test Let someone like Warren Buffett do this. See who calls them out on it. Who called him out on it? Who called any of them out on it? See, very shortly around that time, I've now found information that the nation of Singapore had certain standards that it was going to be implementing. But then within 20 days of that, for whatever reason, now there was documentation that the Basel Convention said, you know what, we're going to postpone implementation of that. Last time I checked, they had not lifted the suspension. They had not lifted the postponement of implementation of standards that people knew for years, at least as early as the 2015 annual statement from one of these major banking institutions of concern that they would need to be prepared to engage. How much of what's going on with COVID-19 is about exactly that? See, the original banking institution of concern, it seems, had this policy where for a period of time it was discussing its efforts to try to diversify its workforce and was hiring a number of people. Now understand, I had been in 5 cities in 2 states in just the last 3 years. I'd also been in California. So that's 3 states, 7 cities in what, 4 years? Going on 5 years, and went through a process of trying to diversify its workforce by hiring specifically Hispanic women as bank tellers and or as some sort of mid-level in its banking establishment. And then for whatever reason, in the summer of 2018, it said that it was going to implement a policy of automated tellers, and it didn't need as many actual people. How many of those Hispanic women or other diverse employees were allowed to have biometric and or other kinds of accounts set up on them and then got fired or laid off, and then their accounts are still working? Are they required to service those accounts without getting paid? Or are other women being imported to take over those account features? Somebody's playing a high-risk capture and release game to see how long they can work those service-oriented accounts before somebody finds out about them. Are they going to do what they're told on command? Are they going to be habituated to understanding that at certain points in time things will happen and then they will be required to confirm the transaction? How long and how many of these women are supposed to be deported so that after those accounts have been reassigned and recapitulated and other kinds of financial schemes have been hooked up on them, they can return to their countries of origin and be made available for local service? I contend that's exactly what these immigrant caravans were on one level. Do I think the people organizing them had that kind of calculation? I don't know. They've refused to talk to me personally for several years, and they had every intention of keeping quiet while all kinds of swaps and pension deals were hooked up on me personally. But I do not believe that by and large the people that were tormented into fleeing and understood that somebody was offering them a possibility for seeking refuge or asylum in another country had that kind of cognizability and calculation. Do I believe the central banks did? Yes. Do I believe the executives at the local branches of these American banks in their countries did? Yes. Do I believe these international lobbyists that may or may not have gone to college with them knew? Absolutely. And I believe they knew 25 years ago. And if you came along after 25 years, then you might have gotten, I don't know, an invitation. It is unconscionable. It is unacceptable to try to take somebody that engaged a good faith effort to work with your organization on explicit terms, including contractual terms, and then to engage them knowingly and willfully in a scheme to defraud, with an understanding that later you would try to extort or pressure them into leaving or to keeping quiet while you illegally terminated them, so that you could take their likeness or identity, claim it as your corporation's property, and then either resell it or redistribute it to other people to aid and abet your criminal scheme, even if you were able to get Congress to go along with it. And even if you were able to get the president to sign some very, very, very high-level securities in the form of executive orders to help underwrite it. It's unconscionable, it's illegal, it's unacceptable. If you are somebody that used to work at a major bank in the last several years and were illegally terminated, I hope you understand it is illegal for you to cooperate with their extortionate scheme. If you were somebody that had an account and then the bank lied and refused to investigate fraud connected to your identity while they try to strong arm you into keeping quiet about all this questionable activity going on with your identity, I hope you know you have support. They will be held accountable, but in the meantime, it is wise to refuse to cooperate with them. Unfortunately for them, the burden of proof is no longer working to their advantage. We've gone way, way, way too far at this point for them to continue with business as usual. And unfortunately, if they thought at one time they could justify saying they were too big to fail, well, there are forces that are much bigger than them.